How to buy a tax lien property. Well, welcome back. Thousands of homeowners fail to pay their property taxes every year. Now, what is the local government going to do? I can tell you this. The local government will not tolerate non-payment of property tax. So today, this episode is going to be about how to buy a tax lien property. And you're going to learn the steps, and you're going to learn how to make some pretty big money. Now, my name is Ted Thomas. I've been involved in the real estate business since 1972, but I've been doing tax liens and tax deeds for the past 30 years. And you're going to find in this video, there's ways for you to make money that's predictable, that's certain, and it's secure. Now, you're going to learn a step-by-step process on how to buy a tax lien certificate and how to earn generous rates of return, and your checks are going to come from the government. Now, this is a short video, but I want you to stay with me because at the end of the video, I'm going to tell you about 2 mistakes that not only newcomers make, but experienced investors make, and you don't want to make these mistakes because they could cost you hundreds of thousands of dollars. I'll be right back. This will be the start of a process that makes money that you're not only going to help yourself, but you're going to help a property owner, and you're going to help your local county. So everybody's in a win-win-win situation. You're going to find out this will really work for you. It's an easy investment to learn how to do it. As a matter of fact, it's been around for 200 years. What could be around for 200 years and not benefit everybody? So the biggest beneficiary is going to be the property owner. So we're going to learn about tax lien certificates and how you could even end up getting a property. So as I say, it's been around for over 200 years. So everything I tell you is really the real deal. So you're going to learn a lot. Now, tax lien certificates are sold at the county level. The counties across the United States number over 3,000. Half of those counties will sell tax lien certificates. The other half of the counties will sell tax defaulted property. Who makes that decision? The state makes the decision. And once the state legislature decides what they're going to do, then they tell the county, they tell the county treasurer, number 1, you have to levy taxes. Number 2, you have to collect taxes. Number 3, if you are a tax deed state, you need to confiscate the property. Today, we're not going to talk about confiscating the property. Today, we're going to talk about they're going to issue a tax lien certificate. And that means you could buy that tax lien certificate, and if you don't get paid, you're going to get the property. So let me start all over again. This episode is how to buy a tax lien property. So you're going to first buy the tax lien certificate, and if you don't get paid, you're going to get the property. We teach you both ways to do it, but your chances are 97% of you are going to get paid, but a few percent of you won't get paid. Now, I know people go to the auction, buy a tax certificate, and then they go home and they pray next to their bed that the people don't pay them. Because if you don't get paid on a tax certificate, you're going to get the property. That's the law. I didn't make the law. It's been in place for over 200 years. All right, so all property owners are required to pay property tax, all of them. Okay, now that doesn't account for schools or churches, but everybody else has to pay property tax. Now, what happens to that money when they pay it? Well, they pay it to the county, and they pay the county because the county needs revenue to take care of the firefighters, to take care of the police department, to take care of the school teachers. You're getting the idea. So the county takes care of fixing the roads. They take care of running the school system. How about the hospitals? They give some money to all right, so the county has a lot of bills to be. All right, so how do they go about that? Well, the treasurer was authorized by the legislature to levy taxes, to collect the taxes, and if they can't collect the taxes, only 2 things the treasurer can do. 1, they can confiscate the property, or number 2, they can issue a tax lien certificate. Well, when they issue these tax lien certificates, you're going to see that there's thousands of them. So I'll just take a slight pause here, and I'll pick up a newspaper that's next to me here. Okay, this newspaper happens to be the Miami Herald, okay? No, it's the Miami Times, so it's close. Hope they won't get mad that I said the wrong thing. This is a list of tax lien certificates, 65,000 of them in this newspaper. You could go to the county website and see the same thing. 65,000 just in Miami-Dade. I'll give you another county. I'm just going to talk about Florida because the whole country is covered with these things. So there's going to be thousands. As a matter of fact, just in the state of Florida, there's going to be 1 million certificates available this year. This is a business of abundance. This is Jacksonville. Let me show you how. Okay, thick newspaper, 32,000 certificates available. Okay, these certificates pay up to 18%. If we were doing this in Chicago, they pay all the way up to 36%. If you're doing this in Arizona, they would go up to 16%. The point is, all of these counties that are tax lien counties will have lists like this. Now, this happens to be Tampa Bay, okay? They'll have anywhere from 20 to 40,000 certificates just in the newspaper, okay? No pictures or anything like that, but you're going to find out a list of tax lien. All right, anybody can buy a tax certificate. Some of them are 5%, some of them are 10, it's up to you. So tax lien certificates, you can make yourself a bunch of money. You can earn 16, 18, 24%, and there's going to be plenty for everybody. All right, now the treasurer controls all the auctions. So now that you kind of understand that, what the treasurer is going to do is sell you a tax lien certificate. That means you're going to pay someone else's taxes. Now, that doesn't mean you get possession. You do not get possession. The property owner can stay on the property. So you see how they're a beneficiary? They just stay on the property. They didn't lose their property, so they're happy about that. Now, if they get through the crisis of divorce or some other thing that happened to them and they recover, they're going to come in and pay their tax. When they come in and pay, if you pay late on any bill, what happens? You have to pay a penalty. So in Florida, they're going to have to pay a penalty of 18%. In Arizona, 16%. You're kind of getting the idea. All right. So I don't know what it is in your state, and you probably do want to know, so I'd be happy to pass that information on to you. All you have to do is, when I finish below me, just put a note and say, Ted, how much do they pay in my state? And not only will I tell you how much they pay, but I'll actually send you a nice little gift, which I'll tell you about in just a few minutes. Okay, so I said half of the states are mandated to confiscate the property. And what happens is the treasurer will confiscate the property. This video is about tax liens. With tax liens, they don't throw the property owner out. They just tell the property owner, stay right where you are. They let the investor buy a tax lien certificate, which does not give them possession of the property. So let me give you an example of one of my clients. I have lots of clients that do this, but this example is pretty shocking. So the client came to me, learned how to buy tax lien certificates, which most people learn right away. All right, so he learned how to buy taxing. So he and his wife decided to buy one certificate for $11,000. Now, they didn't have a lot of money because they're newly married and so on, but they had $11,000. So they bought a certificate. Now, before they bought it, I told them, go check out the property. Make sure it's there. You know, there wasn't a flood or a hurricane. But sure enough, the property was there, and it was a nice condominium. So they bought the certificate. Well, let's fast forward 2 years. 2 years later, they hadn't got any money. And so they called the county and said, look, we haven't got paid. Well, the county went through a legal process. They went through the process with the county. Guess what? They were awarded the property without a mortgage. So let me say that again. They were awarded the property without a mortgage. So they didn't get paid on their $11,000 certificate. They ended up with the property. So they called up Zillow. Zillow said, we'll sell it. They sold the property. After commissions, they got a check for $169,000. So hold on, folks. Not only did they get all their money back, they got $169,000. Think about that. How many deals like that would you have to do in your life? Now, don't get too excited right away, because I'm going to tell you this. 97% of all the certificates that are issued and people buy pay off. In other words, the people come in and redeem. They come in and pay you. In other words, you get all your money back. So 97% of the certificates, you'll get all your money back plus that high rate of return. So this is a powerful investment, okay? I know some people are just waiting to get the property, but 97% of you are going to get paid on your certificate. This has been around for a couple of hundred years. So I have time to do a couple of questions. I'll do those right now. The challenge in this business, which is going to be hard for you to believe if you're just being introduced to it, it's a business of abundance. There's way too many tax liens, and there's way too many tax defaulted property. So they try to sell them back into the market. And when they do, they'll get a lot of money in. But there's going to be leftovers. That means they didn't sell. So what they do is they'll try at the next auction to sell them again. But if they can't sell them, they take them off the list. Remember I showed you the list was in the newspaper. So they take them off that list and they make another list. And they just leave that list at the county. Now that you know it, you can then forget about the auction and just go to the county after the auction and say, I want to buy tax lien number so-and-so because it didn't sell. And you got a little number here, and you can see that it didn't. You were at the auction or you watched it online. You saw that it didn't sell. You want to buy it. And they will say, all right, the back taxes is X, and you'll buy it. You can buy it that's called over the counter. So that's an over. Now, the same thing happens regarding property. So this is a little sophisticated for your first video, but if you're getting it, there's plenty for everybody, not to worry. Well, that's a really good question. That was insightful. When you think about this, you're worried about being in the collection agency. Forget all that, folks. When you buy a tax certificate, you're going to invest with the county. They're going to send you a certificate. Then you just sit on your rusty dusty. Just sit on your rusty dusty. It's a passive investment. They have to pay the county. They don't owe you anything. They owe the county. So they're going to have to pay the county. So if the county doesn't get paid, between you and the county, you're going to end up getting the property. So you don't have to do any collection. There's no collections to be done on a tax lien certificate.